Hello, everyone. My name is Igor Tomic, and today we're at Money20, and we're conducting interviews to find out what is the market up to and what are the latest trends news. So with me, Ran Cohen and Daniel Holden from BridgerPay. And I think your business idea, or at least the business description that I've seen, really great, because in payments, the failed transactions, one of the key issues. And recovering 300 millions with the failed transactions, that's really great achievement. So what do you think in 2026, what are the main reasons for failed transactions and best way to recover them?
Failed transactions in 26 are going to fail because of the reasons they failed in 25 and 24 and the years before. Technical issues, risk appetite from different payment providers. We are in a floor with so many payment options and methods. Each one of them has its own risk appetite. This is why transactions are being declined in some and passed in other.
But I think the technology is evolutioning because fairly 3DS, the shift, the accountability, strong customer authentication, because right now, if you try to buy something, your digital bank application pop-ups with the questions, and that's a good flow. But sometimes banks, they're failing to catch up with the technology, and it's fairly that in real life production, like you are going to authorize something and then your application doesn't show you the authorization, there is no request, failed reasons for mismatch in the countries, etc., etc. So I think it's kind of deeper than the same issues that were 10 years ago.
Yeah, there remains, an issue around user experience.
Yeah.
Okay, there are still many businesses that are not investing enough in how the merchant and ultimately their customer is using payment orchestration. And actually, yes, of course, it's about soft declines and making soft declines now retried and successful. But actually, there's also the catastrophic failure issues. I mean, we've seen in the UK, certainly, cyber attacks like M&S, they lost 300 million, I think it was roughly, dollars in lost revenue. That's because of a single point of failure on their payment stack. Actually, payment orchestration is becoming a much wider discussed topic, as well as obviously specific individual transactions. But it's a critical infrastructure, obviously for the business, but for the economy as well.
And that's a word that is trending a lot, like a payment orchestration people use for payment gateways, payment processors.
Mm-hmm.
What is your definition, the difference? Because all the payment gateways, they fairly can say, yeah, we're payment orchestrators, but what you put in this definition?
I think the main word here is agnostic.
Yeah.
Agnostic, and we added to it self-serve. So we are a non-deterministic platform. In the end, orchestration is coming to be the layer to enable businesses to build their own payment logic. Now you will see multiple businesses, they all have different payment logics, different payment needs, mixes of different payment providers. Us as a payment orchestration, our job is to give them the infrastructure and the ability to place that logic easily in a click of a button.
Yeah, that's definitely true and well said. In this case, it's not just making sure that it works, but providing the underground infrastructure for being flexible in the needed future updates or like flexibility.
And as Ran says, it's not just about the actual connectivity to the various providers, it's the intelligence on the platform that's routing correctly, that's optimizing traffic, and that's helping ultimately the merchant to gain revenue, gain expansion, grow positively, and reduce and remove fraud and issues like fraud from their ecosystem. So it's a combination of factors, not just a connectivity issue.
Yeah, well said. I really like this definition. And coming into the volume, because it's like 2 weeks of the World Cup and you handled well a lot of transactions. So in this case, what do you think globally, what's the most expensive mistake merchants make in the first 48 hours of the tournament?
See, you mentioned the World Cup. Think about a ticket to the World Cup final that is getting declined.
Yeah.
That's a big loss. We have a bunch of ticketing platforms. We see the traffic coming in from World Cup. People around the world are buying tickets. This is why you need to maintain your infrastructure and prepare it well.
And things like, the poly markets and the predictive markets that are coming on, they require, serious amounts of speed and no latency kind of platforms. And if they don't get that, there's a competitor that's waiting in the wings to do so. So the criticality, again, of both the speed and the authorization for the customer's choice is really critical, I think.
Likes to wait. Everyone would like to get the functionality right away in real time. So that's a big demand from the customer.
And without support and do it on his own, in just a few clicks, I think that's the magic.
You say they don't like to wait. They won't wait. They'll move to another provider. So I think it's becoming, as I say, really critical.
And that shifts us into the crypto AI agents like in the future, because I think some customer expectations are already there. It's a little bit maybe nerdy at this moment, like operating with the AI or even agentic payments with the crypto, because you have to know the crypto chains, different smart contracts to understand all those niches. But what do you think? Is it going to be the future of the payment orchestrator combining the fiat and the crypto worlds?
Well, I think fiat and crypto is just a part of this future that you're referring to. In the end, like we said, there are multiple payment methods here, providers, both crypto and card and APMs and buy now, pay laters. In the end, the business that goes in here, he doesn't have any idea who is best for him and what is right for him, for his business, for his stock, for his countries that he is processing, for his users. And that's where we bring the power of AI. We've built basically an agent that can tell you as a business that is processing with Bridger and through Bridger, what are you missing? And what would be the dollar impact of adding those methods that you are missing to your payment volume? And we do it in credit cards, in alternative payment methods, and in crypto. So if you would add crypto to your checkout, what would be the dollar impact that you would gain? That's the power of AI.
And now it's become, as Ran says there, it's becoming a predictive source of information, not a historic and a legacy issue. It's now how are you going to run your business to optimize traffic? And that's really the key differentiator. And the AI expert that we've launched this week will start to do that. And then the further launches of the AI experts in the next few months will look at different parts of the value chain, again, to optimize the flow, to reduce fraud, and to give the customer ultimately a really great experience.
Thank you so much for your time and joining the Fintech Garden podcast and interviews. Thank you, guys.
Welcome. Thanks for having us.
Thanks.
Thanks.